Hello, this is Solomon Davis, Right Side Trader. Today is May 6, 2024, and this is a quick little special video on trading futures. I try to do something special like this every month, and sometimes every time I reach a subscriber goal of every new 10 subscribers I get, I try to throw something else out there new and different. And also, this is what this is all about. And this is all for educational purposes only. As you all know, trading is risky. You can lose money at trading, so please check with your financial advisor. Please check with your significant other and make sure trading is something that is suitable for you. This is going to be on, like I said, future trading. Futures, all I'm going to be looking at is the indexes only. It's the things that I review in my weekly market review. So let's just jump right on in there and see what I'm going to be looking at here. Like I said, I'm only looking at the indexes. There's tons of other future contracts that you can trade out there. I'm not getting too deep into the details of trading futures, but enough to give you a taste of what's out there on these indexes and what they're all about, and what it costs to trade them, and things to be aware of and all. So let's just jump right on into it. The future indexes that I'm going to be looking at is the Russell 2000, the Dow 30, the NASDAQ 100, and S&P 500. These are the symbols for those indexes that you see here now. There's a couple different contracts that you can trade. There's a mini contract and there's a micro contract. Each of these indexes have a mini and a micro, and the difference is the micro is 1/10 of the mini. That's very important. So that means it usually costs you 1/10 of the cost, and it also, you make 1/10 of the movement. You make 1/10, of the potential profit or the potential loss and all. So let's go ahead and jump over and see what I'm talking about there when I'm talking about potential costs and your potential profit and loss. All right, with these contracts and stuff, on the Russell trades in 1/10 of a point. The Dow trades in 1-point increments. The NASDAQ and the SPY trades in quarter points. On my particular platform, these are the symbols and all for those contracts. On your platform, they may be different, but most likely they will be the same and all. On the Russell, a 1-point move on the mini is $50. A 1-point move on the Russell on the micro is 1/10 of that of the mini, so it's $5. And that's where now you, as a small trader, if you are a small trader and you are just beginning to learn how to trade, these are something that you can start with if you have the money in your account to allow you to trade them. In order to trade, though, a mini contract on the Russell, it's going to cost you, on my platform today, based on where the Russell is trading at right now, it costs you $7,000 to trade a mini. But to trade a micro, it costs you almost 1/10 of that. This is also including commissions of $700 in order to trade that particular contract. So that's where it comes in what a lot of people are able to do now. You can trade, the indexes, a future contract for 1/10 of the cost. Although you're going to make 1/10 of the profit. Instead, on the NASDAQ, instead of making $20 a point, you're going to only make $2 a point. On the SPY, instead of making $50 a point, you're only going to make $5 a point. But that contract cost, again, on a micro on the SPY, it's still going to cost you $1,200, almost $1,300 in order to trade that contract. But on the SPY, the mini contract costs you almost $13,000. And the other thing I should also mention here is that the account that these prices came from is in an account that's less than $25,000. So if you have an account that's over $25,000, these prices may be different. So that's one thing to be aware of. And that's why I'm saying, that's why I put a date. I'm letting you know that account size is less than $25,000. And where your cutoff point may be at, based on where you're trading, some places it can be as low as $20,000, not $20,000, $2,000, and these prices can fluctuate and change. Some brokers maybe even less than $1,000, and they'll let you trade these things even cheaper. But I would be very, very, very leery of anybody who allowing you to trade these things for, with an account that only has $500 in it. But they're out there. I suggest that you don't, because again, what happens is, since you can lose so much money trading these things, things can move. The other thing that I'm trying to show you, these things can move, 100 points a week, 1,000 points a week, 700 points a week, 500 points within a week. And sometimes the NASDAQ can easily move 100 points in a day. And if you're only trying to trade a mini or even a micro and this thing moving 100 points a day, and you only have an account of $500 and trying to trade these things, your broker probably will be stopping you out, because they don't know how far. Yeah, you've lost only half of your 50% of your account, but they don't want to they don't want you to go where you go to zero on your account. So that's probably one of the things that kind of scares everybody when it comes to trading future contracts is this multiplier, $50 or $5, whatever it may be, is for every point that the market actually moves. And you have to be aware of that, because the money that can be made here can be fast. The money that can be lost here can be very fast. Thus, again, if you end up getting stuck in a trade, you may not have the money to carry something like this overnight, even if you are getting a discount to trade it intraday and all. And then carrying something overnight like this, and they start looking at, you end up going a week without, doing something in that account, and at $20 a point, you're talking about $14,000. So that's another thing that scares a lot of people when it comes to trading future contracts and all, and where you trade it. Even if you're trading this, that's talking about $7,500 that you have to be aware of and all. So that's one of the things that I want to bring out here. Doesn't sound like that crazy, but it can be. So that's the thing. Those are the numbers. And the other thing that I didn't put here, as you can see, I left this blank, overnight costs, because again, it's still all based on your broker, how much you have in your account, what these numbers will be. For me, this is probably the max amount for me right now. If I want to carry one of these contracts overnight, it's going to probably cost me $7,000. If I even want to carry a micro overnight, it's going to cost me $700 and all. I believe that's where it's at for me right now, because it's based on the account size that I'm actually looking at these things in at this time. All right. Now, the other nice thing when it comes to future contracts is that you can buy or sell, and there's no restrictions. If you run into a broker who's trying to restrict you, run, 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 run. These are pure directional trades. You should be able to trade the market up or down. You can only be up or down at a time, unless you got multiple accounts where you can trade it one account up, one account down, do crazy stuff like that and all. but it's a pure directional trade. No theta decay, none of the moving parts that are involved with options. The other big thing is no pattern day trading when it comes to trading futures. This is a big thing for some traders. So now they don't have to be caring over, I'm less than 25,000. I got to be worried about my 3 and 5 days and all that kind of stuff. You do not have to worry about that kind of stuff or be concerned about that kind of stuff when it comes to trading futures. But the one thing you do have to be aware of, what does it actually cost you to trade one contract? Does it cost you more to trade one contract, to carry that one contract overnight? The other thing you need to be aware of in what you're doing is your position size. One contract costs what it is. If you're trading multiple contracts, what that costs. The other thing, if you're trading more than one contract, say you're trading 5 contracts, so now it's 5 times that $5 and all, which is maybe you're making, so every point move now equals $25. So you're making a losing $25 for every point move. That's the other thing that you have to be kind of aware of. The other thing is expiration. They are contracts, so you do have expirations and all. And future contracts, they have expirations 4 times a year. You have a June expiration, September expiration, December expiration, and a March expiration. And they're designated by these letters, this M, U, Z, and H. So you have to be kind of aware what contract are you trading. Make sure you're trading probably the most current contract, but you don't want to trade it the last week or the last couple of weeks, the way I like doing it. I don't even want to be trading it the last couple of weeks. No way. So that's one of the big things when it comes to future trading and trading in these contracts. Now, some of the things you need to avoid if you're going to be trading future contracts. Remember the overnight cost based on where you're trading at, your account size, and the broker. That cost can double. That cost can be as much as maybe 10 times the amount of the daytime trading. So that's why I say you have to make sure you understand everything about that overnight cost and your position size. Another thing, expiration. Know what expiration you're trading, where you're at, and you do not want to trade in the last 2 weeks of that expiration. Contracts are available years in advance, 2 to 3 years in advance easily, that are available out there on most platforms. I don't know about all platforms, but on most platforms, there's contracts available as far out as 2 to 3 years easily. And also be aware of your cost to trade. What is your commission? Because once you've gotten rid of that pattern day trading, you might be the type of person where you might be wanting to trade 100 times, making 100 round trips trades a day. Even if your commission is really cheap, maybe $3, say it's $1.50 a trade, $3 a round trip. You're doing 100 trades like that. That's $300 a day. Now you made in commission. How much are you actually making in your trades? Is it worth that $300 that you spent in commission? So you got to be aware of that. The other thing for a lot of traders, what you need to be aware of, you don't expect. I can't say never. You don't expect the market to go to zero. What is your maximum loss? If this thing goes to zero, you don't expect the market to actually jump up 1,000 points within a day or within a week or while you have that contract on. But you need to be aware of what that amount is based on the contract that you're trading. And you got to remember, it's a multiplier times the contract, of how many contracts, I'm saying one contract, times the amount that it is per point. Say it's $50 a point. So you got to be aware of all this kind of stuff. So that's $50,000 that you can be out of. If you got a multi-million-dollar account, that's no big deal. But if you're in a small account, maybe they start coming after you. You just need to be aware of this stuff and all. So That's one of the things also when it comes to trading futures. All right. So those are the things. So just avoid, maximum losses. So you got a trading plan, trading strategy in place. Follow your plan, follow your rules, and trade accordingly to that. So that's pretty much it. To sum it all up, start small. One contract. Remember, these are contracts, future contracts, so they do have expiration. I'm using this example for the S&P 500 E-mini contract. This is what the symbol is going to look like, and they're going to have these designations. For like March, you have H. For June, you have M. For September, you have U. For December, you have the Z. Then they're followed by the year that they actually expire. When in 2025 of March, it's the third Friday of those months. So it's the third Friday of March, June, September, and December that these things going to actually expire. So that's pretty much it. Things that you need to be aware of. Again, I hope this is being helpful, giving you just an introduction to future trading and what's out there. It still gets back to your trading style, your trading strategy, your trading mindset when it comes to trading these things. The nice thing that I like about them, I can buy these things or sell these things, and I can hold them, especially when it comes to a micro, without any heartaches. Usually, especially based on the way I look at the market. I try to call direction most of the times. I know when to stay out of the market if it's too high. I know when to get into the market when it's low. I know when to sell the market when it's at the top. I don't know, but I have expectations at those different points, and I can be a little bit more patient, trading a future contract than it is trying to trade an option. I hope this has been helpful. Thank you, new subscribers. I will be putting more stuff out like this, and I'll talk to you guys later. This is Solomon, Right Side Trader. Talk to you later. Have a good one. Bye.